Welcome back to Market with Krish. This video has a recipe to make you rich, so don't click away until the end. This week, I was reading about compounding interest and its magic with time. I would like to share what I learned with all of you. We earn interest on our bank deposits and bonds. If we reinvest our interest, we earn even more interest. That is called compounding. To put in sense, let's say we have $10,000 in a savings account, and the bank pays 2% annual interest. With simple interest, we would earn $200 a year. At the end of the year, we have two options. Take out the $200 or deposit the $200 back into the account. Depositing it back into the account will ensure we now get 2% interest on the $10,000 plus the $200 of interest last year. That would be $204, which is $4 more in interest than last year. We might be wondering how this relates to stock investing because we don't earn interest on stocks we hold. The compounding in that scenario is not selling the stocks quickly and letting it grow over a long period of time. Let's take our same simple example to see the power of compounding over time. Our $10,000 in a bank account with 2% compounding interest will earn us $2,190, which is $190 more in the 10th year, and $2,670 in the 20th year, which is $670 more, and $3,254 in 10 years after that, so 30 years, which is about $1,250 more, and 40 years later, almost $4,000, which is about $2,000 more. Did you notice the earnings increase faster in every subsequent 10-year period? That is what the essence of compounding is. The longer the period, the higher the returns. Our example, our $10,000 would become $22,080 in 40 years, more than doubling the initial amount. Now you may be thinking that is not good enough to make us rich. Well, you're right, because keeping money in a bank with 2% interest will never make us rich. That's why we need to look at stocks for investing. Historically, the S&P 500 has given an annual return of 9.8%. Let's just round it to 10% for simplicity. If we had invested our $10,000 in an index fund instead of bank savings account, our money after the same 40 years would become a whopping $450,000. That is 45 times our initial investment. This is what a simple passive investment in an index fund can do to our money over time due to the compounding effect. And we're nowhere done yet. We have still not seen the impact of value investing clubbed with the power of compounding. The great Warren Buffett, as you probably guessed, he's my favorite, leveraged principles of value investing to generate an average 21% annual return. Now with that kind of return, our $10,000 would be a jaw-dropping $20.5 million in 40 years. Now we're talking about serious money. And we're still not done. That was just a one-time $10,000 investment. If we save $100 a month from our regular job income and invest that $100 every month, the amount of money we will have after 40 years will be $32 million. In summary, the recipe to become rich is start investing early, invest a small amount regularly, and follow value investing principles. Watch my previous videos to cap those. Then we can become very rich before we retire. Stay tuned for my next video. If you haven't, please subscribe to my channel and leave your comments, suggestions, and topic of interest down below. Thanks for watching Market with Krish.